For Boeing, an unprecedented commercial jet review. Let's talk to Ben Berkowitz. He's our deputy companies editor here at Reuters. All right, big press conference today. Not just these 5 mishaps, but there have been 10 in the past, 6 weeks? FAA saying the plane's safe, but what about investor and consumer confidence out there?
The stock's going down. You know, the big customers are saying we trust Boeing. We don't think there's a huge problem here, but it's a huge reputational hit. It's something like 20% of the in-service fleet has had some kind of problem or other just in the last 6 weeks.
Right, so critical systems are going to be reviewed, as we mentioned, unprecedented. So 800 plus orders out there. They were over budgeted on this thing. If they have to go back and fix these planes, is that going to be a financial hit for Boeing? You
know, there's some cost concern there, but really it's more about the reputational hit. You know, this is their flagship plane. This is their baby. This is their pride and joy. It got a huge amount of publicity when it came out because it's so different and there's so much new engineering.
Right. Fuel efficient, right?
Fuel efficient, lighter, faster, goes farther. I mean, it's got a lot of attributes that were really attractive to airlines. Yeah. But all these headlines are really starting to make people reconsider, was it ready? Did they build it too fast? Did they rush it out of the factory? That kind of thing.
We've heard obviously about JAL and Al Nippon who have the planes. United Airlines here in this country is a big one, right?
United has a few planes. They've already had a couple of electrical problems. Qatar Airways is a big customer that's had some problems. The Japanese airlines have been really badly affected this week in particular. So it's creating a really big reputational hit for the company.
Okay, finally, they're in contract negotiations with the engineering union. These are the folks who would presumably fix this plane, right? That doesn't sound so good.
Right. I mean, they've got a contract expiration coming up at the same time they've got this issue going on. The two aren't necessarily related, but it's the worst possible timing. It's an issue that they just don't need to be dealing with while they're also trying to get the plane back on track.
All right, Ben, thanks so much. I'm going to turn now and talk to Jerome Martis, who's our Director of Consumer Research.
Hello.
We're going to talk some retail, and lo and behold, Best Buy, yes, Best Buy, is up 11.5% today because holiday sales were flat.
Yes. Well, that's an improvement from the previous quarters. But what's really key is the fact that online sales improved by 10%, which shows that now they're gaining some of that market share, which they had initially lost to the likes of Amazon and other online retailers.
So their pricing strategy worked because they were matching these guys online over the holiday season.
Exactly. And also the fact that they hired more representatives to improve their customer service and close the deal once the consumer would come into the stores because they were a victim of showrooming.
Aha, so they were able to steal the deal once you walked in the door there. All right, good news for Best Buy. Moving on to JCPenney. They can't catch a break anywhere, huh? Price targets cut, UBS cut to $13 from $21, downgrades from sell right to neutral.
And you were seeing that all across with analysts. When you look at StarMine, its earnings estimate is currently a penny. But according to a very highly accurate analyst, it's very likely that it could be as weak as a loss of 51 cents.
Wow.
That's 52 cents below its current estimate mean, which is very troublesome. JCPenney also currently has the weakest same-store sales at negative 26%.
Wow.
They had a very challenging holiday season, and analysts are very worried that this excess inventory is going to hurt even spring same-store sales.
All right, play CEO. You can do it.
I'll try.
The strategy here, I mean, Ron Johnson from Apple, is he maybe trying to say, hey, these shoppers can't be or shouldn't be or will not be that far apart, but are they just fundamentally such different businesses that what he's brought in just will not work with the JCPenney customer who likes the deals and the coupons?
He's alienated the core consumer base of JCPenney. He's alienated it with his business strategy. And JCPenney is in highly need of a turnaround story, similar to Best Buy. One retailer, one department store that does good discounting without hurting margins is Macy's. So probably he should incorporate more of that strategy to improve his margins.
All right, Jerome, thank you so much. I'm going to move now to the hotspot. And as I do, remember to check out those snaps at the bottom of the screen for more headlines of the day. And now, guest number 3 on Guestapalooza. Agnes Crane from Reuters Breaking Views. We're going to talk Wells Fargo. Fourth quarter profit rose 24%. That's a record high. Stocks down, however, 1.5% today, really due to the net interest margins.
Yeah, and again, that's the issue that the market has been very focused on. Last quarter, they also saw this margin compress about 25 basis points. This time, it was 10 basis points. And this is essentially the money that Wells can make off of its short-term liabilities like deposits or short-term funding, against the amount of money that it's getting from its investments and loans. Right. So if that's going down, then it's making less money.
So basically, they're getting more deposits, which is costly, than they are in what they are lending out.
And what they're lending out, exactly.
Okay, interesting.
So again, this is an ongoing issue, not just for Wells Fargo, but for other banks who are facing the same kind of problem, right? We're in a low rate environment, so it makes it that much harder for them to make money.
Right. Fewer loans from the third quarter as well?
Their loans were up. It's just they weren't rising as fast as the deposits were coming in.
Gotcha. Okay, and we're also looking at, do we have the B of A is up there because some other folks in the mortgage business down today as well on this news of Wells Fargo. All right, and finally, folks, we're going to talk about Ford because they were the only car company to not get a bailout. And guess what? They're the only ones that are hiring 2,200 white-collar jobs in the U.S., including in the product development, so refreshing and revamping and boosting up their vehicle lineups there. 75% of the jobs are in engineering, manufacturing, and information technology. That's the largest increase in new salaried positions at Ford in more than a decade. And finally, I want to mention that my colleague Rhonda Schaffler and Paul Ingrassia here, who's supercar guru, our deputy editor-in-chief here, heading out to the car show. Rhonda's going to be talking to top auto execs out there. Can the sales momentum that we've been seeing continue throughout 2013? And they're going to do a special report on the hot new Chevy Corvette. So watch for that, folks. I'm Lisa Bernhard. Thanks for watching us. Happy Friday. And remember, you can follow us on Twitter at Reuters Insider and check out our YouTube channel, Reuters.com/ReutersTV.